Sir, a very good morning to you. Appreciate you joining us here on First Take. I mean, we were just talking about jewelry and gold stocks, how they have done fairly well in the last, 5 days. Some of these stocks have given double-digit returns. Anything looking attractive in this space to you?
Yes, Suyash, good morning. Yeah, the gold stocks have been in the earlier year, they have been underperformers. Suppose stocks like Kalyan Jewelries and Thangamal Jewelries, most of these stocks have been underperformance. As what we can see is right now, the unlocking of trade, the pent up demand is coming towards the gold and jewelry, and people started celebrating the weddings and all. So there is a pent up demand we can see with respect to the jewelry stocks are concerned. Most of these stocks have been rallying this Diwali. We can see definitely it's a pent-up demand towards the high consumption. As far the jewelry stocks are concerned, two things we need to consider. One is when the economy is doing well, when the disposable incomes of the people are going up, people tend to do these kind of uh, consumption of jewelry. So this year has been the economy has been so robust. The domestic consumption has been uh, strong. So this is the reason we can see some kind of strong activity with respect to the jewelry stocks are concerned. But our favorite remains to be the we need to stick with the leader at this point of time. So by and large, whatever be the reason, we want to stick with stocks like Titan and the companies who have a pan-India presence and a limited presence in one geography. We're looking forward for the large cap companies in this space with high corporate governance and having a pan-India presence at this point of time.
Good morning, sir. You spoke about Titan. Now I'm just looking at their year-on-year returns for the 1 year. Titan is at 24.38%, but the three names that stand out are Kalyan, which over the year have given returns of 227.8%, Senco
I'm
73.95%,
not
and
able to hear.
Thangamayal 171%. What do you make? Do you think it's time for investors to look at these three stocks as well?
Uh, it is more stock specific at this point of time. Okay, it all depends upon the risk appetite of the investors, and also as far the jewelry stocks are concerned, we need to take into cognizance of the high corporate governance and the level of management. Also, this is also an important theme. One need to take when anyone want to be in this thing as a serious investment decision. Okay, my advice to the investors is stick to the leaders and companies with a high corporate governance and more transparency with respect to the jewelry stocks are concerned.
And Kranthi, before we move on to Indian markets, one final question on gold. I mean, we have seen a bit of a correction in spot gold prices has come off about $50 from that $2,000 crisis level that we have been calling it. What's the view there, sir? Is there more upside left? Because, I think we are about $150 away from that all-time high level on spot gold.
So there's two things that determines by and large the price of global gold price. One is what the central bank action towards the monetary policy, and also gold can be perceived in two ways. One is if there is a fear in the market, in the global markets, then the safe haven, the money flow will get into the gold. And also, if the economy is extremely doing well, then the disposable incomes tend to get into the gold. So there are extreme ends. One is there is a complete euphoria with respect to the economy is concerned. The other end of the market is there is a fear in the market. So during these phases, the demand for gold will go up. So recently, few fortnight, okay, there was a extreme fear in the market. People are running for the safe haven, that is gold, and right now what we can see is there was a uptick in the gold prices at that point of time. Okay, what I can pursue is in the near term. Okay, we can see some kind of price consolidation with respect to the gold price is concerned. Of course, uh, as you rightly mentioned, this year the gold has outperformed the silver prices, but our long-term view is silver is going to outperform gold on a longer-term perspective because of the industrial demand silver pursues in the medium to long term.
Sir, now shifting focus back to Indian markets, jewelry stocks are certainly doing well, but not we are not doing too well this morning ahead of Diwali. Down about 50 points or so from yesterday's close. What's the view there? Can we expect some bit of a consolidation at least in the next couple of weeks? Like once the traders actually return from this holiday weekend.
Suyash, markets are not in a mood to run away from this level. As we keep on discussing, 19,500, 600, these are the ranges where strong resistances are there. But markets are in a good consolidation phase right now. What it's showing is the strong strength with respect to Indian markets are concerned. 19,000 formed as a strong support for the market in the medium to short term. And coming to the earnings season, there are completely no negative disappointment with respect to the earnings season is concerned at this point of time. Majority of the companies, by and large, they focused improving their margins and the profitability. Even though there might be some kind of concerns with respect to the revenue growth is concerned, but managements in this quarter they're given paramount priority to the profitability and the profit growths are concerned. So at this point of time, nothing to worry. One of the key concerns for us also we have discussed many times on your show, the crude oil. The crude oil came into the favorable range currently at the 3 months low, which was the key concern for the Indian market. The crude tend to be in this comfortable zone, or if the crude comes below from this range, which can be a favorable environment for the Indian markets on a medium to longer term basis. But at this point of time, markets are not in a mood to run away from this level. So they are in a consolidation phase right now. But the action is more here. It's more stock specific. It can be sectorial. It can be the stock oriented, like the mid and small cap or the large cap space. The action is going to be more about stock specific from here at this point of time.
Talking about stock specific action to continue going forward, we are in the last leg of the September quarter earnings, and two big auto companies are due to come out with its results today. Before we get to you on the stock prices, Amit, Eicher, how is it going to come out?
Eicher Motors, Suyash, the makers of Royal Enfield motorcycles, are expected to give a net profit jump of as much as 44%. And everything is going for them. Reduced raw material costs, hike in prices, and jump in sales. The revenues are expected to rise 15% to 4,054 crores this quarter. EBITDA margins are likely to expand 282 basis points as per analysts to 26.12% in the second quarter. Most of the people are attributing, like I said, these rises to a jump in sales. But the jump in sales themselves are led by their Hunter motorcycles, and also an expanded margins in the Volvo Eicher commercial vehicles joint venture. So the EBITDA margins for the VECV, the Volvo Eicher joint venture, are expected to expand 8.3% in the second quarter as well. So that's as far as Eicher Motors are concerned. I'll come to Mahindra and Mahindra.
Before we get to Mahindra and Mahindra, let's also look at the stock of Eicher Motors, how it is doing this morning. Kranthi, it's down about 0.8%, has been a clear outperformer in that two-wheeler segment. If we talk about, like the likes of Bajaj Auto, TVS, Hero MotoCorp, they have given returns on a one-year basis from somewhere around 20 to 45%. Eicher, on the other hand, is down about 5% or so. What's the overhang there, and what's your overall view on Eicher Motors?
The segment is limited to the higher end of the two-wheeler segment with respect to Eicher Motors are concerned. It's not a brand that is a broad spectrum. It is more about the more discretionary spending of the people is concerned. So some kind of overhang is there with respect to Eicher Motors is concerned in a medium to long term at this point of time, Suyash. If you see how the way the TVS Motors, okay, because of the different product offering, because we cannot compare, even though the most of these brands are two-wheeler segment, but the brand product diversity is more there with respect to TVS Motors and compared to Eicher Motors, which is limited to the high end of the Royal Enfield kind of a segment. Whereas the TVS Motors, if you see 10 years, people tend to ignore this stock, but past 10 years, the stock went up by 27 times. 100 rupees invested in this stock is 2,700 rupees. So the product offering is praying at this point of time. Asian Motors, they bang on to only one segment, and which is slightly becoming overcrowded in this the higher end of the pyramid of the product offering is concerned. This is the overhang on the stock.
You spoke about the two-wheeler segment where they are the leaders and it is becoming overcrowded. Do you think in the times to come, this Volvo Eicher Motor joint venture is going to give them the expanded volumes that they are hoping for away from the two-wheeler segment?
It's not going to happen overnight. It might take, before delivering the numbers, it might take another 3-4 quarters to see the numbers from these segments. We need to wait and watch. The stock is in a consolidation phase right now. The capex is happening, but to derive the fruits from these JVs will probably might take another 3 to 4 quarters going ahead.
Another company, Amit, that's going to come out with the results is Mahindra and Mahindra. What are the expectations there?
They have been hit by weak sales, and pretty weak sales in the tractor segment, but the auto sales have gone up. So they are, so the auto sales have quite a bit offset the weak sales in the tractor segment, and they too are expecting a net profit of 37% to 2,844 crores, revenue jump of 20% to 24,423 crores. So even though there has been a weak tractor sales, their product mix, expanded product mix in the passenger vehicles and the SUVs has quite a bit made up for that.
Sir, coming to you, the stock, I mean, I think it's down about 2% this morning, was the top gainer yesterday, surged about 4%. Overall, has done fairly well. On a 1 year basis, the stock is up about 20%. On a 6-month basis, it's up about 22%. What's your view on Mahindra and Mahindra? Is it a stock to buy?
So it is a very defensive stock, very silent in its nature. Okay, it tends to give that mid-teen returns by and large on the table to the investors. So right now, what's happening in this particular company is concerned, the one focus is emerging with respect to the EV space is concerned. As rightly mentioned, there is a downward demand with respect to the rural demand is concerned. It's not big debt because of the uneven monsoon at this point of time during these past 2 quarters. So the tractor sales has been overhang for with respect to Mahindra is concerned. Where Mahindra is doing extremely good, they identified the opportunity in the SUV segment. When a couple of years back or a decade back, when Indian automobile industry is concerned, it's an industry for the entry-level cars. But the perception has changed in the past 5 years. India is the capital for the SUV. Okay, the more demand is coming to the SUV segment, whereas the first-time entrant who are buying their first car, earlier they used to go to the entry-level cars for the small segment cars, whereas right now what we are witnessing is the first-time buyer is directly getting into a SUV segment. That's where Mahindra and Mahindra is taking the advantage with respect to their business proposition and product offering is concerned. Right now, how they are going to evolve with respect to the EV and also going ahead, the product offering of Mahindra and Mahindra is going to play a crucial role with respect to the company proposition is concerned. By and large, it's a good stock to hold on, very good defensive stock to hold on, very less volatility, nothing to worry about what's happening in this high volatile nature of the market at this point of time. By and large, low risk appetite investors can definitely pick up stocks like Mahindra and Mahindra at this point of time. Every dip, in fact, they can add in a very staggered manner.
You spoke about the EV segment where they are lagging behind Tata Motors. Do you expect them to get more aggressive and focus on the EVs and primarily export segment in the EVs in the times to come?
And also, I mean, their portfolio overall is tilted towards diesel, engines. I mean, the kind of crackdown, at least the talks of it we are hearing from, authorities and government. Do you expect, I mean, they have to move drastically away, not only from the, not only move into the EV portfolio, they have to also get out of the diesel portfolio, right?
Suyash, it's not going to happen overnight. Of course, we do discuss on paper. From paper to get into physical mode, it do take time. Okay, it might take probably. It will not change going to overnight over a period of time. We're not going to see the entire vehicles on Indian roads getting into EV mode overnight. It is, of course, it is going the fastest segment. The EV is fastest segment because of the low base at this point of time. But still, the ICE and the other segments still dominate in Indian economy because of the we need to develop more infrastructure. EV infrastructure is concerned. So and Indian consumers are tend to the urban consumers might change their pace of the product offering immediately, whereas it will not happen. It will take a lot of time with respect to the rural demand is concerned. But overall, okay, the EV segment is the fastest growing segment. It's tend to move up at a faster pace, but it's not going to happen overnight. It's going to take further take much more time. Probably we can expect another 4 to 8 quarters to see the product offering to change. Of course, Mahindra and Mahindra have to spend allocate a lot of capex with respect to change their product segment is concerned at this point of time.
Sir, one
And
final, yeah.
if you see the largest the automaker in India, Maruti, they have not ventured into on road. The product
Right.
offering is concerned. They don't have any EV offering at this point of time. So right now, it is more about vigorously on the discussion stage. But to create a suitable product offering, it will take in India, but it is progressing in a very positive way at a faster pace.
All right, that's a view from Kranthi. Sir, before we let you go, Samvat 2079 is about to end. What sectors can one look at, or what themes can one, pick up on for the next Samvat 2080?
Suyash, we have been quite bullish with respect to the defense as a sector is concerned because it's a new age sector. If you have to discuss 10 years back, there is no absolutely no defense sector in India. So past couple of years, defense has emerged as a new sector in India. The defense technologies, the space technology, this is where the more the focus is coming, the capex is happening. And despite of the worries, the defense stocks have been delivered fabulous returns. Just to name stocks like Cochin Shipyard, Garden Reach, Mazgam Dockyard. In fact, the names like Hindustan Aeronautics, these stocks have been delivering. So there is a clear visibility with respect to the defense order book is concerned in a medium to long term. So investors, they need to be, the valuations are quite not cheap at this point of time, but one need to be stock specific and if they are investing in a company which is defense based centric, here the margins can be improved and order book visibility is clear. So one should not ignore the defense as a space for a longer term investment. And also the engineering and capital goods tend to do very good, and infra stocks also extremely doing well. They're having the worst is behind for infra stocks at this point of time, and we can see the earning visibility is emerging towards the infra stocks are concerned. So these stocks should be in the forefront, but one
Right.
should not ignore the banking and financial space in India. It is more exciting and interesting space. Of course, they are in a consolidation phase in a medium to short term, but we need to keep banking and financial services forefront in India, because once the FI flows comes back in India, banking and financial services, a strong franchising model that do
All right.
outperform in Indian markets.
Yes. Banking and financials, defenses, the themes that
Space.
one can look at for 2080. But with that, we have completely run out of time. Thank you, sir, for joining us here on First Take. A very happy Diwali and a happy Dhanteras to you, sir.
Thank you, Suyash. Happy Diwali for all your team members and the host at Newsline.